I'm so old now that when I refer to Richard Thaler, I can go back to the previous century to talk about what Thaler said. Okay, jokes apart. Yesterday I saw mental accounting at play, and I was wondering why does this happen. What is mental accounting? I'll first explain what is mental accounting, and yes, I think Thaler spoke about it in 1999. So this was the decade, the previous century, where he says the people treat the money. They think money is fungible and money has no labels. They think all money is equal in our heads, but it is not true. So 500 rupees which you got from a lottery, 500 rupees which you got from a share trading profit, or a 500 rupees which your boss gives you for doing a job well, or a 500 rupees increase in your pension, are all treated very, very differently. Not even pension, I would think increase in your in the balance of your PF, right? If your PF balance goes up by an X amount, 500 is too small to have an impact maybe, so maybe by 50,000 rupees. You will say, oh, that's good, it will make my old age more secure. But if you were to get a 50,000 rupee income tax refund, you will say, oh wow, I got a refund, let me blow it. Well, actually you should blow your brains out, because you made a mistake by which you paid an excess, and therefore you are getting a refund. So if you did the calculation, get better at calculating. If your chartered accountant did it, then you better sit down with her and tell her that the calculation, what are the calculation mistakes, why she ignored the TDS or something like that, because of which you got an income tax refund. You should be ashamed you got an income tax refund of a big magnitude, rather than say, wow, let me celebrate. But that's how we are, right? We will celebrate that 50,000 very differently. We may go on a vacation and say, oh, we will not use, I'm not talking those people who have money, but people who have borrowings. Suppose there's credit card loan of 6 lakhs, 5 lakhs outstanding, and this person gets a 50,000 rupee refund from income tax. Is he or she going to use that money to repay the debt, which to me would be the topmost priority? But the chances are they'll say, no, that I've already budgeted. I know how I'm going to repay over the next 6 months, 8 months, 1 year. But this 50,000 allows me to take a vacation. So I don't think I could have afforded a vacation in December in the last minute. So now I'm going to use this 50,000 there, right? So this is how mental accounting affects us. Yesterday, when I was talking to somebody, last week, when I was talking to somebody, and he was asking how much money does he need for retirement. So I did a quick calculation and said, you need about 3 crores. 3 crores would have given him a very comfortable lifestyle, because he and his wife thought they were spending about 10 lakhs a year. I'm not getting into whether it is right or wrong, but 10 lakhs into 30 is the 3 crores, and 3 crores would have been very comfortable. He said, no, even if you tell me 3 crores, I'll be comfortable only about at 6 crores or 5 crores, whatever, so be it. Now, he had a very funny problem. He had a very big, let's say a big house, because very big by Bombay standards is hardly big by Indore standards or Coimbatore standards, right? So he had a big house in Bombay which could easily fetch him about 4.5 crores. And he had about 3 crores in retirement funds. So he had net worth of 7.5 crores, out of which 4.5 was in real estate. So what could have he done? He's a South Indian who is anyway planning to go off to Coimbatore. You sell off in Bombay for 4.5. You put it in Coimbatore in a senior citizen place for say 1 crore, 1.5. That still gives you 3. So you have 3 plus 3, you have 6 crores. And therefore you are comfortable retiring, because you have your 6 crores as you think in your head. The calculator just says you need 3 crores, but you want more comfort at 6 crores, so be it. I'm not questioning anything. So I said the smarter way is to sell the house and go off to Coimbatore and buy 1.5 crore house. You will have 6 crores surplus. I mean, you have 3 crores already, and you will add 3 crores to it. Assuming there is some tax liability, etc., it will be at least 2.5 crores. So you have reached your 5.5 crores. So he was not willing to do that. He said, no, I will wait for that 3 crores to grow to 6 crores. I'm not sure whether this is a mental accounting problem or saying I've already decided, Subra, that I will want my corpus to grow to 6 crores by itself. I will not touch, I will not resize or downsize my house. I will keep making my annual or half yearly trips to Coimbatore, to other places, to see how it is to work, how to it is to live in a senior citizen home. But I think very unlikely that he wants to go. So he's using mental accounting, but here is very clear visibility of mental accounting saying this is my house, right? I cannot sell this house to fund my retirement. This is my house, this is my retirement money. This is money kept for my children. I cannot combine all of that. It has to be kept separately. I will keep it separately. I will tag it separately, right? That's how it works. How does it impact us while investing? If you remember, or if you know, your grandmother or great grandmother, depending on your age, would have kept the money in different envelopes, right? So here was money kept for laundry, here for grocery, here. That was more a budgeting system to find out. Then they wouldn't remove money from one cover and put it in another cover, right? They said, okay, this is the money that I'm going to spend on the proverbial istri wala who comes home and takes 10 rupees per cloth. Every day I pay him 50 rupees or 40 rupees. So 1200 rupees is lying here, so this is what should go for him. This is another some money like now. This is good when you had cash, but nowadays when everything is being swiped or paid by phone, you don't have that luxury. But you have one luxury. You have a luxury that many of the credit cards will analyze and tell you where you are spending the money. Here is the time when you should be using mental accounting to your advantage. Say that here is a fund in which I am investing to buy white goods, right? So I am putting away 20,000 rupees per month. So whenever my family wants to buy something new, all you have to do is pick up these two funds and say how much money is accumulated there. If there is enough money in that to replace a fridge, you will do, or you will wait, or to replace an air conditioner. This puts some kind of a discipline, saying you don't change things just because something is being thrown at you, right? दो AC लिया तो एक AC free. Doesn't mean you go and buy two ACs just to get one extra AC free, and then you're wondering where to put it. Then you're calling up people and saying, look, I got an extra AC. Do you want it, right? Don't do that. So not to get lured in, or you say, okay, here is my white goods fund, here is my vacation fund. I will keep putting money away in a vacation fund, and since I did not take a vacation in 2019, it just happened that way, and I couldn't take a vacation in 2020, 21, and for a big part of 22. Now a lot of money has accumulated there. So in 2023, I will go on a vacation with a vengeance. Maybe I'll go abroad, maybe I'll upgrade, maybe I'll travel business class, maybe I will stay in a premium hotel, whatever. I will do something because this is vengeance seeking, right? So here what has happened is the envelope which you had kept for vacation could not be spent. So again, going to Thatcher, going to mental accounting, going to behavioral finance. Sometimes you can use mental accounting to your advantage like this, saying, okay, this is how I will spend, these are the packets in which I have kept it. But however, please understand, don't use mental accounting to your disadvantage. Understand that all money is equal. Ultimately, whether you paid your maid servant from the istriwala packet or whether from the grocery packet, for her money is money. Today, if you're paying everything by check or by an app, you have to keep track because you should be worried about the app crashing also. And people like UPI give you a listing, they don't give you an analysis. Of course, some credit cards, I remember giving you a nice breakup at the end of the year, which is normally the financial year. Or you could always make it January to December, where you know where you have spent the money. So if you charge everything to one particular credit card for your expenses, you know how much you've spent on petrol, how much on airfare, how much on eating out, how much on entertaining clients, and how much on personal eating out. You can easily make that distinction, right? So use mental accounting to your advantage, not to your disadvantage. So understand that we are falling a victim to mental accounting. Once you understand all that, you will never be able to eliminate that bias. It always stays. But at least it means that you know that you can use it to your advantage. For example, I pay X amount as medical insurance, and I do an X amount as SIP, of course on a X divided by 12 for an SIP in a pharma fund. So I'm saying that if I fall ill and my medical insurance is not sufficient, then the balance I will dip into this pharma fund. So to me, pharma fund pricing, I mean the PE doesn't matter, the timing doesn't matter. It is an SIP which I've been doing over the last 3-4 years. Once in a while I'll put some more money into it, but today I have created a surplus in that account, which makes me feel good that in case there is some uncovered, uninsured portion of my bill, that will be paid by this fund. Does it really matter? Answer is no, but I'm just checking how much money am I accumulating, because over the last 20 years I have not made any claim on my medical insurance. So can this work, saying I will only invest for my medical expenses, I will not take an insurance? Maybe it would have worked, but 20 years back I did not have an answer. So today, does it mean because I have a surplus in the pharma fund I'll stop paying the insurance premium? Answer is no, but at least you know that you are falling prey to your mental accounting when you're making financial mistakes. Will I be able to eliminate them? No, but can I use it very innovatively? Can I use it to my benefit? The answer is yes. Do I always do it? Answer is no, right? So it's very difficult, but yes, if you understand behavioral finance, you start learning how to use it to your advantage rather than to your disadvantage. Thank you.